Welcome back to Liberty and Finance. We're always glad to have the opportunity to come to you live. We're live streaming this. I'm Dunnigan Kaiser. These are my sons, Kaiser Johnson and Elijah K. Johnson. We're here as gold and silver brokers licensed through Miles Franklin through the state of Minnesota. We're here to answer your questions live tonight about anything about the gold and silver market, availability of product, prices, premiums, storage, insurance, shipping, quantities, what to buy first, what strategies to use when adding to what you already have, where to get questions answered. So ask your questions here. If you haven't already subscribed, you got to subscribe on YouTube, and then you can get into the live chat to answer your questions live. We got a whole bunch of questions that are already coming up. Eli, you already started coming up with a list of some of these.
Yeah. So the first one here is, what are the current inventory levels of American Silver Eagles 2023 in stock? And I was just checking the inventory, and this one's from Jake, the question is. And, it's actually very good inventory of the Silver Eagles. One of the things I will mention is that despite the good inventory, we are still seeing extremely high premiums for American made products. And I think that has to do with a lot of things, obviously inefficiency at the mint, but also a higher demand for American made products. And that goes across the board for, the semi-numismatic gold, the gold eagles, gold buffaloes, and also junk silver, but most dramatically high premiums in the junk silver and silver eagles right now.
Anything from the silver from the US Mint is at highest premiums that there are out there. Yep.
Yeah.
We've got a question here from Bobby Kreider. Don't lose sight of the Liberty side and the importance of real money. Absolutely. We're delighted when we can have constitutional attorneys on our show, certainly from the Rutherford Institute. We've had, as well as Dr. Edwin Vieira, talking to us about the departure from constitutionality that we've been seeing, and the loss of liberty, the loss of our freedoms that are guaranteed by our higher power and supposed to be protected by our Constitution that we've been at loss of in the recent era. And we're trying to bring those stories to you as well. And good for the reminder here, and appreciate that as well. Thanks, Bobby.
Yeah, and I think just to add to that is something that I've reflected on is that, what we're doing is getting precious metals into people's hands. And this is something that throughout history was commonplace, right? This precious metals were money. People had gold and silver coins. But it's just in the recent history, in the last maybe 50, 100 years, that this has really fallen out of practice, right? But holding precious metals is, just as Bobby is mentioning, really a way to take back your liberty, have something of real value, and take back ownership. And I think, with respect to ownership, ownership also helps you be more responsible in some respect as well. So it really is taking back your responsibility for your financial life there.
Well, I think, you point out, that, and we talk about this a lot of times when people are talking about pre-1933 gold and that kind of thing, and the importance of that. And just that up until 1933, everybody in the United States, every single day, had exposure to gold and silver. Now we're at something like less than 1% of people have exposure to gold and silver in their portfolio at all. But until that point, every single person in the United States who used money had exposure to that, and a lot of people actually held physical gold and silver, and that's something that just as something to have, and still the constitutional definition of a dollar is still based in silver. And so sorry, I'll fade in a little more here, that it's something that is taking personal responsibility, like you point out, Elijah, to actually deal in real money and have that. So
we also have a question here from Town Center. How low would silver have to drop to for premiums to rise higher? I think maybe you're referring to the phenomenon that we observed for most recently in March of 2020. I guess people call that the COVID crash or whatever, where basically all the markets took a dive, and it seemed that there was this rush to liquidity across all asset classes. People wonder where the bottom was, but it remarkably, American Silver Eagles, for example, scarcely went below like 24, even though the spot price of silver was like 11.8 at one point. So there's definitely that phenomenon that can happen where just because the spot price crashes doesn't mean that dealers are able to part with their inventory. One of the considerations that dealers always have to deal with is replenishment of inventory. It's like, if you sell what's on the shelf now, how are you going to be able to replace it? And so the actual price at which people are willing to exchange physical doesn't always track the highly inflections of the spot price, because everybody knows the spot price trades on the margin, as all markets do, stock markets do, et cetera. But it's also heavily derivative influenced, and that doesn't mean that people are willing to part with the physical metals at those extreme prices that can happen in a flash like that. So now the question specifically, how low would silver have to drop for premiums to rise higher? Very difficult to answer, because that's not the only factor that affects premiums. The real-time availability of supply and demand has a very strong influence on premiums as well.
Well, I think we saw that here just the last couple of months, right before March, or help me, when SVB collapsed. I had a lot of clients calling me going, oh, I'm not going to buy right now because the spot price is up. But premiums had actually fallen, as the spot price had come up, premiums had actually fallen such that it was actually cheaper to get it, when the spot price of silver was $21-22 an ounce, but you were paying less on premium than you were when the spot price was $18-19. And then as soon as SVB collapsed, the spot price didn't change a bunch immediately at first, but we saw a huge kind of skyrocketing of premiums across the board, as people rushed into actually wanting physical gold and silver, and as that became more difficult for us to keep inventory coming in and that kind of thing. And so I think there's not a direct, the premiums do tend to be a much more direct correlation to present demand of physical metals, whereas the spot price, as Donegan points out, it can be much more related to these large trades that are happening between financial institutions and things like that. And so there's not necessarily a direct correlation between spot price and premiums.
It's one of several factors that can influence it, but it's by far not the only one, for sure.
Yeah.
We have another viewer's question. This kind of ties into the premium question. They're wanting to know the difference. Is there a significant difference, or do we see a significant difference in relative liquidity of the coins from the 6 major mints? So you have the Eagles from the US, the Maples from Canada, Great Britain has the Britannias, and then the Krugerrands from South Africa, Philharmonics from Austria, and also the Kangaroos from from Australia. Now, the interesting thing is here that essentially what I've seen is not so much a difference in liquidity if you're dealing with a major bullion dealer. So that's kind of with the caveat that if things stay the same, that you can still sell back to major bullion dealers. There really shouldn't be an issue selling any of those. But typically you're going to be paying the most for the Eagles, and then second is the Maples, and then the other 4 are pretty much priced right about the same price. It can go up and down, but those are pretty much relatively the same. And the same on the buy side. You're going to be getting a higher buyback price on the Eagles and Maples, and then the third is going to be those other 4 coins there. I think it really is important to think of why you're investing in precious metals when you're considering what to invest. If you really just want exposure to the price, focus on getting silver instead of agonizing which coin am I going to buy. If you're wanting preparation for worst case scenario, or you might want to barter with it if things completely collapse, you want a more recognized product like the American Silver Eagle or junk silver. But besides that, I think focusing on getting silver in your hand is probably the more important thing if you just want exposure to the price.
One other thing I mentioned on that. So I actually, I live in Arizona and have transacted in silver with a number of different people out here. And I think maybe you tend to see that more people being interested in that in certain states rather than other states. But one thing that I've also noticed is that even people who are not versed in precious metals at all have heard the word Krugerrand before. And because, for many years, the only 1 ounce gold coin that was out there was the gold Krugerrand. And yes, the silver Krugerrand is a much more recent development, but still people are familiar with the word Krugerrand. And so I'm not knocking US coins at all, or the value of that. I think all of those they're important to have, especially if you don't have a lot of those and you've just focused on stacking ounces and that kind of thing. It's good to have American coins and things from the US Mint. But even I think, which might be counterintuitive, as opposed to like immediately going to, oh well, Canadian maples are the next best because they're significantly lower than American eagles, and Canada's right here. I think amongst the uninitiated, as it were, Krugerrand has more cachet than a
name
silver
recognition
maple.
for sure.
Yeah.
Another consideration is what part of the country you live in. And I keyed in on the part of the question that says, going forward to the crisis, do you see a significant difference in relative liquidity? So not so much price, but liquidity. In other words, acceptability, trustworthiness of
I guess
that.
that's what I'm trying to
Yeah,
speak
exactly.
to.
And I did have a client, some of you have heard this story, but I'll say it quickly. A lady who lives in Southern Texas, and she took gold maple leafs, Canadian gold maple leafs, into her local coin shop there and tried to sell them. The coin dealer said he would not buy them from her. And she was shocked. They were in perfect condition, gold Canadian maple leaf coins. She said, why not? They're good. They're perfectly good. He said, I know they're good. I like them. I own some myself. He says, but I'm in the business to stay in business here, and I need to be able to resell things very quickly and keep my money moving and not have it sitting on the shelf. He said, my local clientele here in Southern Texas, if you were selling me American gold eagles, I would have them resold before you could walk out the door. He said, but these gold maple leafs are going to sit on my shelf for a couple of weeks and my money's tied up. I'm stuck there until I get the right customer who will take them, and my local clientele don't want that. So it isn't, I would take this back to my engineering days and say, when you're looking for a solution to a problem, consider the like a diagram, the universe of all possible solutions. So in this case, if you're thinking about some future trading partner who you haven't met yet, is all in your mind right now, but you're coming up with a scenario, it's a realistic scenario to think through, is of the universe of all possible trading partners that I'm realistic to come across in a stressful time, a crisis time. It may be not just major coin dealers I'm going to be dealing with. It might be some local yokels or whoever, local people in my community who may not have much understanding, may not know a lot about metals. So things that are more familiar to them, they're going to trust more. And if they don't trust what I have, they may either ask for a huge knockoff, a discount. No, I don't think that's real, so take 50% off. Or they may say, I'm not going to do a deal with you because I don't trust that thing. So if you don't have what the other person trusts, you don't have anything. And not having anything, going back to our reluctant prepper days, is not where you want to find yourself in the time of a crisis. In a crisis, you want to make sure you have what's going to be the most trusted, the most recognized, at least some of it. That's another thing,
Right?
Rather than thinking all or nothing. And Andy Schechtman talks about this well. He says, you don't have to make your entire ice cream sundae all cherries. Yeah, you can have cherries on the top, but you can make the bulk of it. So once you cover that base of having some of the most recognized and most trusted things, in other words, from the US Mint, if you live in the US, then go ahead. If you're going to add more ounces later, then sure, you can go with less expensive ones from other countries. You can go with bars or that sort of thing. But at least if you get into a crisis situation, you want to have at least some. And how big that sum is may depend on scenarios that you can imagine for yourself. What would you want to accomplish in a crisis situation? If it's just getting a gallon of gasoline or a couple of pieces of chicken or something, like that's fine. It's not going to be that much. But if you're talking about some major needs that you might want to anticipate, having something that you could trade with the most possible people, at least have that base covered. Once you get the base covered, then sure, go ahead and add more ounces at a lower cost. And right there,
Sorry, go ahead.
The name recognition of Krugerrand is a good one to remember. Yeah.
But when I think to increasing a stack is different than
getting started.
Yeah, exactly.
Laying down your first foundational layer of your financial fortress there.
Yeah.
Eli, do you want to maybe take this one?
Yeah, so this is a very good question here. Zach asks, where do we see the gold price going? Why are you guys selling and not hoarding it? What are you guys doing with the cash? Thank you. So I think this addresses a common misconception about gold dealers, that they're just selling the gold that they have invested in the past. And then in that case, why should you buy from them if they don't think it's a good investment?
No.
So I don't know if like a real estate agent would be a good example or something, where they're not selling their own houses. So when we got in, at least, my dad and I got into this business because we were researching about the financial system, and we thought precious metals were a good investment. That's not financial advice. We can't give financial advice, but we got into this so that we could, give other people this opportunity to hold real wealth in your hands. So when we sell precious metals, we're actually buying it directly from the wholesaler, and that goes to you guys. So it's not like we're selling stuff that we actually own. We're not selling our own stashes of precious metals. Where we see the gold price going, I think that question answers itself based on how we got into this. Obviously, we're bullish on precious metals. That's not financial advice, but that's at least my own opinion.
Yeah, I think maybe the other one thing to finesse what you were saying there, Elijah, is I think everyone at Miles Franklin invests in precious metals,
Purchases it personally.
We purchase them personally.
All of the
as well.
employees, including the owner,
Yeah.
and everyone in between, are all purchasers and owners of precious metals because we believe that it's the right thing to do. It's a safe thing to do. It's something that's necessary for us to take care of our family's financial future. So we're trying to help other people do that as well.
Yeah.
Yeah, that's a good point too. There's a question about Catherine Smith saying, should you get government minted coins, stock up at the 20 and move to another government minted coin? So a lot of mints will package their coins. Maybe this is what you're getting at, Catherine, is like you'll get a tube of 20, whether it's gold eagles or silver eagles from the US Mint, and then you can move on to another one. That first level, as you're getting started, is dependent on your overall plan, your overall budget. I would suggest you think in terms of maybe 10% or 20%. Some people go all in on the US, and we can talk about that in just a moment, but I think that at least before you move on, think about the big picture. Think about where you're going. What's your strategic goal? And one way to think about that is to think about your total nest egg, your total investable net worth of your household. That's your checking and savings accounts. It means anything you've got in CDs or bonds. It means whatever's in your retirement accounts. It's even the value of your home. So your total investable net worth. And then think about what percentage of that you'd want to make sure you want to have to protect the rest of your portfolio. And in traditional advice, through traditional time, like 10% of a portfolio in gold is deemed by most conservative traditional analysts to be sufficient to protect as an asset class the rest of your portfolio. If you consider these to be not ordinary times, then some people want to increase that to 20% or more. Some people go 50%, but that's something that you need to think about as far as your risk exposure. Bill Holter, well-known broker with Miles Franklin, says the answer to the question of what percentage of your overall net worth you should put into gold, his answer is how much do you not want to lose.
Right.
So if you come up with that big picture strategic goal, you don't have to take it all in one step. You can take that in baby steps towards that. But as you're taking those steps, I would suggest that maybe the first 10% at least of those steps you want to take with something that is the most liquid, most trusted, et cetera. And then when you feel like you've got that covered, then you can move on to less expensive forms. So rather than making a flat number of saying, yeah, just one tube of 20, then you're covered and move on, I would say come to that answer based on what your strategic goal is, and make at least 10% of that perhaps to be something that's going to be of that most trusted, most liquid form, and then move on to less expensive forms. That's another way to approach that, to do a cost savings.
And on that same line of thinking, bars or coins, I think the same answer to that is coins are typically more desirable, would probably be more easily traded. So bars are going to be a lower premium though. So kind of having that be more of just the wealth preservation, and the coins probably for more worst case scenario, and think as Dunnigan said about your end goal. What is your end goal there?
Yeah. And I think that, I think I at least frequently get the question of like, well, like you guys will buy back and like, what is the buyback? Where is it worth getting eagles for a buyback, or for that kind of thing? And I think that's, I guess for my mind, that's a question that is treating silver and gold, for that matter, as though it's
something to flip.
It's something to flip. And if you're in to silver and gold to flip and that kind of thing? Okay, great, wonderful. I don't think most of us, certainly none of us here, treat it as day trading or that kind of thing. And I think we look at it as silver as money and gold as wealth preservation. And so I think we have different considerations going in as we're looking at it that way. And we can't advise you on any of them, but we can tell you what we do and the way that we look at it and give you perspective on that. But I think when you for me, it took a big mindset change of just going of like, I'm not purchasing something like a boat or a baseball card or a stock that I plan on just turning around and selling, and I want to get the best resale value on it and that kind of thing. I'm putting my money in an actual tangible asset that, excuse me, I'm putting my fiat currency in an actual, and I'm somehow still able to buy real money with this fiat currency. And I will keep doing that until that doesn't work anymore, and until I have more of that in real money that I can use in the long term and hold in the long term. So,
got a question here from 213th AIB. That's any thoughts about the proportion of 90% silver, in other words, junk silver, constitutional coinage, to silver bullion coins in your holdings? And again, I'll turn around the question with another question and say the primary strength of 90% silver coins, like dimes, quarters, half dollars, that sort of thing, is their small size and recognizability. So they check off that box. They came from the US Mint, so they're highly recognizable. Okay, good, that's covered. But they also have that additional utility of small size, fractional ounce, like a dime is about a 14th of an ounce and a quarter is about a 1/5 of an ounce. So they're very useful from that standpoint for barter purposes, for small daily transactions. So the question to ask yourself is, how much of my nest egg, how much of my solid asset do I want to have usable specifically for small barterable purchases? And one way to answer that question is to think about, well, what does it take to run my household for a month? For food, for fuel, for repairs, for services. If the ATM was down and the dollar wasn't trusted anymore, and I needed to have some small pieces of silver, which is money, to use for running my life for the next, as best as we can. And we can't predict what the world's going to be like and what we're going to have to give up and do without in those circumstances. And it's pretty sobering to think that through. But if I needed to carry on my household from those basic needs standpoint for 1 month, 2 months, 3 months, 6 months, 12 months, how far do you want to go? Come up with a number. And if you had that as real money, junk silver, 90% silver coinage, you'd have that largely covered better than most people. So that's one way to look at that, rather than just as a proportion of your overall holdings. It's thinking of it from a use standpoint of how long is it going to last you as a store of daily transaction to support your lifestyle.
Definitely. Thomas here wants to know which metals are you guys personally most bullish on? I guess I'll answer this one as I would say the question kind of presupposes that you're investing right to make the most profit, right? So in a lot of people invest in precious metals as money, right? So it's not really an investment. You're saving wealth, right? And in that case, I think the monetary metals have been gold and silver throughout history. So that's really a different question. But for those who are looking for like the greatest potential upside, we can't give financial advice, but based on what I've heard and the guests that I've talked to, typically silver is seen as, a greater potential upside because of the gold silver ratio, right? So right now it's around 80-1, 80 ounces of silver to purchase 1 ounce of gold. Historically, I mean, if you look back throughout history, it's been closer to like 15 or 10 to 20-1, right around that area. In the last 100 years, it's been closer to 40-1. Regardless of what the number is, silver seems to be more undervalued than gold right now, and it has industrial use as well. So there's another bullish aspect of silver. And also, when you look at the amount of silver out there, a lot of it has been used up and is in landfills right now, as opposed to gold. not most of the gold ever mined is still above ground. So that's just looking at the supply aspect as well. What is above ground? That's a more bullish argument for silver.
The scarcity of silver.
Well,
Exactly.
I think
Yeah.
you look at that. I mean, there's a couple of other factors, especially in the industrial kind of question of it. I mean, silver is the most conductive metal. Every other metal is measured on a scale of 1 to silver, as far as that goes. And so we're using more silver now in electric cars and electric in every piece of technology that we use than we ever have in human history by a far margin, and it's exponentially growing how much silver we're using. And because of the spot price of silver has been so low for the last well, decades, you see that there by and large aren't primary silver mines where people are mining silver for silver. Usually silver is just mined alongside gold or copper right now. And so these primary silver mines, most mines take about a decade to get going and really be up to full production. And so what you're looking at is kind of this demand curve that is sharply increasing, and a supply curve that is dead in the water. And so I think that's another reason, is as far as industrial use goes. Another reason that you're looking at something where that's why one of the big reasons I'm bullish on silver is I can't imagine that I mean, short of some kind of subsidization or nationalization of silver in different countries around the world, that you could continue to keep a spot price where it's at right now with the demand as high as it is for industrial silver. So
another guest we have on often, Elijah, you often interview him, is Bob Moriarty, and Bob Moriarty often cuts right to the chase of something. He says, keep it simple. He says, sell what's expensive, buy what's cheap. And so as Andy Schechtman has pointed out, that in this era we've been in for 40 years of low and lower and lower interest rates, there's been a three-way bubble, mother of all bubbles, a bubble of everything, meaning stocks and bonds and real estate have all been high priced, and precious metals have not, but relatively in terms of increase from 40 years ago. So in other words, if you follow Bob Moriarty's advice, buy what's expensive and sell what's cheap, you'd start out by looking at the major trend. You'd say, well, then I'd be selling the things that are in a bubble, stocks, bonds, and real estate, and I'd be buying what isn't, precious metals. But even within that major stream, Andy Schechtman says, then you look for differentiating value within the major trend. So if the major trend going forward is going to be commodities and precious metals for the next, who knows, 5 to 10 years, according to Rick Rule, then within that trend, that's where you get to what Elijah was talking about, the relative value proposition of silver. And Neil would often point out in the text stream, you'll see many posts from Neil enthusiastically endorsing platinum as another one to consider alongside silver for a special value proposition relative to gold currently. But that's not the only thing to consider. There's, for individuals who are considering what should I emphasize in the metal that I should accumulate, another thing to consider is what's my personality like? Am I wanting stability, predictability, insurance, safety? In that case, gold is the premier asset. Gold cannot be outdone as an asset for wealth preservation and long-term wealth maintenance and purchasing power maintenance and insurance. Silver, yes, it's at a dramatic historical value relative to gold currently. It also is more volatile. Silver can easily go up 25% one week and down 10% the next week. So if you don't have a taste for that kind of volatility, and silver takes about 80 times more storage space and weight than gold. So if you live in a small urban apartment, you can hold, $20,000, $30,000, $50,000 worth of gold in the palm of your hand, and not so much with silver. So there's many considerations to what you want to overweight in your portfolio. There's two questions that are related to that. One from Trio Legend, who says, should I sell my gold to buy silver? This, with a high gold to silver ratio like we currently have, some people are using a strategy of selling gold to buy silver, and in this environment, with the anticipation that if things play out the way they have in the past 4 major bull markets, as Rick Rule reminds us, we can expect and hope that silver will outperform gold on a percentage basis over the next period of time. And at some point, all else being equal, meaning if there's still gold available to swap back into, et cetera, you should potentially be able to come out with more gold than you started with by using a strategy like that. Swap currently from gold into silver. After silver has outperformed gold, swap back from silver to gold, end up with more gold than you had originally. There's no guarantees that that strategy is going to work out. There's all kinds of ways that it could run into pitfalls, but that is a strategy that is potentially attractive if the current precious metals bull market works similar to the last four. So go ahead. And then there's another aspect around that to facilitate if you are planning on cashing out of metals. If you, for example, if you anticipate a couple of years from now, you're going to want to buy a property or a business or something like that, and you anticipate that you're going to want access to that liquidity,
or going between silver and gold,
or between going silver and
platinum,
gold. Anytime you're making
yeah.
one of these buy sell transitions and you're trying to set yourself up for making that as smooth as possible, there's a comment here from Alan Ritter saying, if you flip or are planning to use the vault service. I'll let you guys expand on that, because
Sure. So, you know, our primary bullion exchange, we work with multiple bullion exchanges, but our primary bullion exchange is in Fargo, North Dakota, and there's a depository there called Dakota Depository that's co-located with our main bullion exchange, and so it does make the process and the timeline of doing a swap or getting liquidity if you are making a large purchase and that kind of thing, faster and easier in that regard. Even with our Brinks program, there is a certain additional level of ease to that, but it's not as markedly noticeable as with Dakota Depository, where it's just they move it down the hall and your transaction is complete. So it takes a couple of days versus what can take a couple of weeks coming from, you know, if you're shipping from your personal storage to the bullion exchange, or from a different depository to the bullion exchange, and then, you know, it has to get to them. You trusting on UPS or more likely USPS to reliably get it there in a timely fashion and that kind of thing. And sometimes they do, and sometimes we see them, you know, even on something that's you know, registered mail and supposed to be 2 to 5 days, and that's it. It'd take 2 to 3 weeks for them even to just get it to the bullion exchange. So certainly if you have the idea of wanting to do a swap, or either if it's from one precious metal to another, or swap of precious metals into fiat currency or that kind of thing, it does speed up the process to store at the bullion exchange or right next door.
yeah, there's no perfect answer. That's one thing that I think to in preparedness, you're looking at possibilities, you're looking at probabilities, you're thinking through scenarios, you're trying to position yourself as best as possible, but don't be so hard on yourself that you think, I've got to get this perfect. I've got to think this through until I figure out exactly the right thing. And that's the one thing I'll do. And I'll do that. And that'll make all the difference, because that's a good way to get analysis paralysis, where you get stuck and you don't take action. Action is brilliant. So even if it's a small step, just take a step. And then that'll lead you to a new comfort zone. You'll have more experience. You'll give you more perspective. You can take another step. Action is brilliant, but just analysis for its own sake can really get people stressed out, thinking I've got to get this perfect. And the reason I bring that up is because some people feel like if you don't hold it, you don't own it, meaning I'm not going to have any of my stuff in storage.
Yeah.
Other people feel like, well, yeah, but if I want to do one of these gold for silver swaps or silver for gold swaps in the future, how do I know that the shipping is going to work? How do I know all that stuff? So if you already have it where it needs to be, you can remove a lot of those question marks in the future. But there's no perfect answer.
Yeah. And I think one other thing on that of kind of giving oneself a break a little bit here is that yes, I think there's an importance and there's a timeliness to all of this that we talk about. At the same time, you know, people ask like, well, gosh, what if I want to do a swap, or you know, what do you guys do when there is no more gold or silver out there? And the thing that I remember is, you know, for the better part of 5,000 years, gold and silver have been precious metals. There's not a lot of it, and people hold it, and people use it, and people trade with it. And if we see something like a dollar collapse, or you know, who knows what, I think the good news is that then there becomes a higher necessity to trade and to use gold and silver again for the reasons that we have them and the reasons that they're there in the first place is these monetary metals. And that so I personally, and this, I can't speak for Elijah or Dunnigan here, but I personally don't have this looming concern over me of one day there will be no gold and silver. Everyone will just be hoarding it and holding on to it, and no one will be able to use it, and it'll just be, there'll be this locked market. I think that in any scenario that I imagine, that we fall back into something that is like what the last 5,000 years have seen of people using
the reason we are able to be with you all having this conversation, the three of us and the 642 of you are able to have this conversation, is because we are descendants of countless generations of successful survivors. And one of the most amazing success traits that the human race have is adaptability. So people figure out how to face new challenges and they get adaptable. And you're right, for thousands and thousands of years, one of those elements of that adaptability has been trading real things for real things. So that's a success strategy that's worked very well throughout the eons. Did you want to follow on another question here?
Yeah, I mean, I think there are kind of two questions that have to do with maybe with the topic we started back at the beginning with liberty, right? Taking ownership of precious metals as a way to take responsibility of your finances and also take back your liberty. We have one question here about confiscation. What form of silver is safest in terms of potential confiscation, or is it mainly a concern for gold? We also have David asking a question. My motivation surrounding the ownership of metals stems from the government's historical and predictable behavioral financial mismanagement. So I think those kind of two statements or questions tie into the same thing of, the government is very predictable of taking away more and more of our liberty, and being not very prudent in the way that they manage money. And that is a risk then if you hold the government's money, of it, kind of being inflated into oblivion, right? Where your dollars year after year are worth less and less. So precious metals are a great way to preserve your wealth in that respect. But when it comes to the government then, making laws of, that's a way to protect your wealth against government mismanagement. And then the government can make a law saying, the ownership of gold or silver is illegal. They did that back in 1933, confiscating gold. So I would say, again, it's hard to prepare for every single eventuality, right? Or every single possibility, but we can just do the best we can. And I think having precious metals is better than not. David Morgan has pointed out of the Morgan report that your wealth is being confiscated right now if you're holding dollars. So that's a guarantee your wealth is being confiscated. They're confiscating the value of your dollar. If you hold precious metals, you have a chance of preserving your wealth. And I think most of the guests that I've talked to talking about confiscation, some of them have pointed out that, silver is a lot less likely to be confiscated because it is an industrial metal, and it would be very difficult to confiscate something that is so crucial for industry. It would be very difficult for the government to do that. Forms of silver that might be less likely to be confiscated. Bill Holter has pointed out silver eagles, because they're minted by the US government. It'd be difficult for the government to sell you something one day and then take it back from you as well. Gold eagles, semi-numismatic gold is something that people think you could claim you're a collector, right? So you don't have to turn in your gold. All of those I think are important things to think about. But I think most importantly is that your wealth is being confiscated right now, and holding some form of precious metals is better than not at the moment.
Yeah, and in regards to that, I think you look at again, like we talked about earlier, that historically, the last time a gold nationalization or confiscation happened in the 1930s, everyone in the U.S. had exposure to gold and silver, and we were a gold-based economy as far as where the value of our dollar found, where our dollar found its value. That's not the case today. And now there are many easier ways for the government to confiscate value than to go in and get physical gold and silver from everybody or demand, people turn it in and that kind of thing. There are many much easier ways for them to, take value from people and nationalize it. So, like Elijah points out, nothing is a guarantee, and but gold and silver confiscation at least isn't high on my concern radar.
Right. I think the thing to do maybe is to change because if you ask the wrong question, you often get the wrong answer. So maybe the question is, how is the government already confiscating my purchasing power?
Yeah.
The fruits of my labor. So we work, we give up part of our life to go do work, and we create value. So we get rewarded for that in forms of pay. And then taxes, boom, right off the top, take a big cut of that. My wife and I just moved from Ohio to Florida. Now, no state tax, no county tax, no city tax. So those 3 line items I was able to delete right out of our place where we keep track of our finances, and it felt really good to do that. So there's things you can do right now to reduce your exposure. And then, as Elijah, you point out, David Morgan saying any so-called dollars you're holding in a bank, which they aren't anyway, you're not holding them and they're not yours. And anyway, that's a whole nother discussion, which I don't know we have time to get into. I think we're just about out of time here. But anyway, how is the government already stealing my life and stealing my purchasing power? And how can I shelter myself from that? Precious metals are an obvious part of a most reasonable answer to sheltering ourselves from that stealing of purchasing power. We probably have time for one more before we got to wrap here, if anybody's got one here.
Yeah, I mean, I think just one more point on the confiscation element is to think about what would be the easiest thing for the government to do with respect to confiscation. A lot of people have pointed out that, as we've mentioned, that no one's holding precious metals right now. So it's not really
less than 1/2 of 1%.
Exactly. Right. First of all, confiscating precious metals seems to be a very remote possibility. If it came to that, you might have the government going after like ETFs or large holdings of precious metals instead of someone having 10 ounces of gold in their basement. Why would the government even bother going after them? I think just kind of using some reason, just thinking about it for yourself, because it would be an unprecedented situation in some respect, given that there are new elements today. So it's really important just to kind of think through things for yourself as well.
Yep. And Maria 28 says the legislature can always change that. I think it gets back to what you were talking about earlier, Elijah, about and Eric as well, Kaiser, is that in the 1933 Nationalization Act from FDR that was based on the situation at that time. There's no, as we just saw, we've all lived through, guys, right? The last 3 years, all kinds of restrictions that maybe none of us could have foreseen or predicted, that sort of thing. So the rules can be changed by authorities. And so how do we position ourselves to minimize the impact on our families of those potential rule changes? So that's all great questions, guys. It's been great. We really appreciate the active involvement that all of you bring by watching Liberty and Finance, the comments that you add. When you add a thumbs up to the video, it helps us to grow the channel. When you subscribe, and then make sure you click the little bell icon, it'll notify you of any new releases. But most importantly, please do go to libertyandfinance.com. That's our website, libertyandfinance.com. Just put your name, your email address, click submit, and then acknowledge, accept the first email you get. Then you'll be in our all free mailing list. We don't share your mailing address with anybody at all, but you will get one email in your inbox each day with our most recent interview and our weekly specials. So that way we can stay in touch with you, and just appreciate everyone's support, your encouragement, just countless words of encouragement. Your prayers sustain us and give us energy to go on. We're trying our best to help as many families as we can. You guys are a big part of that by sharing and forwarding our videos to others and talking to people in your family or in your work life or other walks of life. So thank you all for being here. Everybody, really appreciate your participation. Any final thoughts from you guys?
No, just thank you everyone for joining.
All those thanks. Yeah,
exactly.
Exactly what he said.
Okay, well,
all of that. Yeah.
So thanks, guys, for being here. Appreciate all your kind words about supporting our family as well. So
thank you.
Thanks to each, and our prayers and thoughts go out to each and every one of you and your families. We're pulling for you. We want to support and by helping educate, we're getting educated as much by our guests as anybody. So thanks for being here, guys, and appreciate you being here. We're going to end the stream, and we'll look forward to another opportunity to do this soon. Thanks.
Thanks. God bless.